you for tuning in, and I hope that you guys get the best out of this session. This is our second Fireside Chat series for Accelerate Africa 3, the third cohort, and we like to make these quite interactive and something where we get to learn a lot. So our guest today is very, very special. I like that we managed to get somebody I call my uncle, my dear uncle today, because during the last chat we had last week, we had Mr. Adeyo. He mentioned one name when he talked about the capital market side and how he didn't know much about it, but these were people who built it. And that name is here with us today. So today I'm very excited to have Mr. Jalo-Waziri, Mr. Haruna Jalo-Waziri, who is the CEO of the Central Securities and Clearing Commission. And it's not a government agency. It's basically, the way I describe it to my friends is that it's NIBS for the securities markets, right? And if you know, we've talked a lot about what I think about the future of fintech moving from banking to securities. We'll talk a little bit about that as well in this fireside chat. But really like I said, what we're trying to do with our fireside chats is we're trying to find people who've actually done the work to build things in this environment. They've actually spent time building institutions, building things from scratch. Last time we had Mr. Adeyo, who was on the founding team of Stanbic, which is arguably one of the strongest financial institutions in the country. And now we're having somebody like Mr. Jalo, who, beyond CSCS, actually he took CSCS from a moribund government agency, government-owned institution to perhaps one of the most interesting players in the capital markets in Nigeria today. But I guess without further ado, we're going to jump straight in and just talk about it. Thank you so much for joining us.
Thank you, and good afternoon or evening, wherever you are.
Yes.
Thank you for the kind words. You make me feel like a dinosaur now. I mean, when you talk about people like Shola Edo, put me on the same gesture as them. By the way, Shola is my good egbon. And Shola actually served on our board when I became CEO of CSCS. So he was part of the governance committee at that time. So he was part of the starting blocks for the reform that happened at CSCS.
That's amazing.
It's good to hear that he was on this chair. I shall let him know that I went to go and sit down where he was.
I will send him a picture.
I'll send him a picture. But it's a good thing. Well done, guys. I think what you're doing is incredible. And when we talk every time, there are interesting ideas. I hear what you guys are doing.
Yes. Absolutely.
Kudos and well done. Maybe that's why some of us are sitting on the chair.
Thank you very much. We're very inspired. So one of the things, and I was joking about this last time. So I said, your generation is underappreciated for taking us from basically zero. I mean, this country was nothing, barely anything, by like 1991 was when what we know today as the financial services ecosystem emerged, right? After the liberalization of banking. So from 1991, which is 33 years ago, I know because that was when I was born.
Excellent.
Till now, your industry took us from zero to almost 500 billion. Let's just say 100 billion to $500 billion in GDP. And I like to joke I'm back. I want us to start by talking about your story in this journey of, over 30 years, how did you start? How did you get into this world of finance? What are the experiences you had that shaped you? And feel free, we're here to really just listen to you.
Incredible. I don't know that anybody has really asked me this kind of question about to go back in the journey of how you ended up where you are. But I'll try and piece it together. I hope I do remember because it's been so long ago. So I left grad school around that 1992. But I knew I was always going to be in the capital markets right from school. And what influenced me were two movies actually, and I happened to come across them. One was a movie called Coca-Cola Kid.
Coca-Cola Kid.
Yeah. So the second one was Wall Street. All right.
Wall Street.
Yeah. The first one, not the second one.
Not the second one. Not Wolf of Wall Street.
No, Wall Street. And those both movies had some characteristics about how markets work. So Coca-Cola Kid was this guy who was an MBA grad, went into Coca-Cola and tore apart thinking about how Coca-Cola should work, and sitting on a framework that was around how do you play markets to get valuations for companies. It was not a true story, but it kind of like was based on something
Interesting.
if I get it correctly. The second one was Wall Street, how the thinking around other people's money, not yours, risking it and taking value for whatever you've done, but then of course using your brain. So leaving school, I knew I was going to be a stockbroker day one. I knew I was going to either be in pure deal origination or asset management, but to cap it all, I was going to be a broker from day one. So when I left school, I, funny enough, started my career in market at the Nigerian Stock Exchange.
Wow.
Back in 1992. At that time, I got into interview with Hayford Alile, who was kind enough to now introduce me to then Professor Ndi Okereke.
Wow.
And I did an interview across with I think it was Henry Ogiri, Okereke, and Alhaji Razak, who was head of research. Okereke was head of quotations, which is where the action was. But the admin side was by Henry Ogiri, who's the late Henry Ogiri, former DG. The idea for me was understanding how the market worked. I wanted to start at the Securities and Exchange Commission, which was a pure base for regulation. And at that time, the Securities and Exchange Commission was actually doing most of the work that investment bankers did. So they vetted the prospectus, determined price for when an issuer was going to do an IPO, PO in the market, and did most of the, if you like, investment banking work that's now been done at the investment banking houses. So for me, I wanted to start with deal origination, see how it worked, and then move up to investment management, then trading. But unfortunately, I couldn't get into the SEC early. So I started at the stock exchange, which was quite interesting, at the quotations department. So I was reviewing applications for listing. Was the analyst doing the analysis to make recommendation for companies to be listed or not. So it was still part of some form of investment banking. But I realized that at that time the exchange was still,
new.
Not new. It was started in 1961, 62. But I thought they were not ready for what I was trying to do, and I wasn't ready to work at the exchange in what I was trying to do. So I got an opportunity to go to the SEC almost a year after, thereabout, and I jumped for the opportunity because I wanted to start real hardcore investment banking. So I went to the SEC. I started with the what they call, I think, corporate finance department in the SEC. I cut my teeth during Akamiyoko's time. Deacon Kiran, a few of my colleagues who are now in the market, and started doing that evaluation. And spent 3 years, became fairly, settled in that particular perspective. And then Godwin Obaseki then was in Sectors, and he brought in an application for NIDF, which was a very revolutionary product at that time, which is Nigeria International Debt Fund. which had raised the fund to buy Nigeria promissory notes and other debts, and then was going to pay coupons in dollars and was
Yes,
raised
I
in
remember
dollars.
that.
Exactly. Quite a very unique
Yeah, at the
instrument.
time.
Yeah. So he came for approval, reviewed it, and then after he got his approval, so I see him off the elevator and he asked me, what are you doing at the SEC? How long do you see yourself? I said, well, I will continue until I get into proper investment bank. And he said to me, why don't you come and see me? I'm like, see you? He says, yeah, otherwise you become obsolete here, because this thing you're doing is going to come to the investment bank. So better come and prepare for it so that you can come work for me at Sectors. So Monday morning, I went to go and see him. Nice office. It was at, what's it called? Something, Foreshore Towers. Very beautiful office. Nice people.
And Sectors was what at the time?
So Sectors was a securities firm that was doing also investment advisory.
Okay.
They had started the fund with the NIDF, but they were primarily a brokerage firm. Okay. So the equivalent of a prime broker in our market. And it was building capacity. This is where I met Ndidi Wuneli. No, not Wuneli. Ndidi, what's her name again? Forget me. Edozian.
Okay.
He was head of, I think, asset management then. That's why I met Mezu Wuneli, who just came from JP Morgan, even though he met me there. Eno and all of them, Bisola.
Wow.
So we were really, Wahidi Longe, who's CEO at NASD, even Jude Chemeka was actually with us at Sectors, who's current CEO at NGX. So Godwin had a very nice, tight team. And, it was quite interesting to go work there. And it was laid back. This was when technology was about to explode. And Godwin had a guy called Philip Umaruge, Femi Adalemo, and there's another guy, Greg. These guys were geniuses at that time. They could write codes overnight, and by morning you had something that was working. Wow. So they automated the research system in terms of how, data was collected. I think I spoke to one of your colleagues about Stockwatch the other day. So they had built something called Capnet. I can't remember what it's called. They automated the research system, and it could every day give you end of day reports automated between Greg and all of them.
Before AI.
Oh, absolutely. I mean,
what year was this?
This was in 1996, I think, or 95. Thereabout, and it was brilliant. And we had, so that was the first office, I think, that had a network that had an internet connectivity. So you could stay on your desk and, we had a modem and they distributed the internet across. But the good part of it was that we used to play Quake all night on the network, right? Before we started work. So we had good infrastructure, introduced me first time to real technology with these guys who taught me how to pay attention to technology at that time, apart from just doing my advisory work. And some of my interest in tech actually came from there. And so I'm always very grateful to Philip, Femi, Greg, and I think there's another guy, I can't remember his name now, even though he wasn't there. But those guys really built something. And Godwin always saw that he needed to, if you're going to do business in this market and go retail, otherwise, technology was going to be very important at that time. Not many people had internet connectivity. You had to go to cyber cafe. The modems were quite unique. All this dial-up, when it connects and then you go to the bathroom, get a cup of coffee, then it loads one page. It was that simple. So it was interesting. I actually cut my teeth around investment banking because Godwin had a partnership with Citibank in terms of deal flow. And we did work on quite an interesting project that was really incubated out of the US show in terms of products, mergers and acquisitions, and even thinking around it. I remember some of the landmark deals we did were the Heineken hybrid offer, which was the first in the market at that time. The M&A we did BAT, and of course, some of the what you guys call incubators now had a company called STC Linux. And by the way, they were ahead of their time. I must tell you the story about STC Linux. Maybe it's time to do it. Louis Dozen came from Harvard, I think, in the US, and started work with UBA with Kim, and decided that look, they wanted to bring a switch to drive electronic cards at that time.
Mm.
So we raised some money for him to start up. Brilliant idea. This was one of the most brilliant people I've met in my life. Louis Edozie.
Mhm.
That happened to be Ndidi Edozie's husband, by the way.
Mm.
Yeah. So he came to this idea and said, you know what? Back in the day, every bank drove its own ATM,
Mhm.
right? So you couldn't put a card and then, if you like, use another bank's
Yeah,
ATM.
you couldn't put like a UBA card in a
On a-
Sterling Bank machine.
Not anymore. So they were just, everybody was driving. So he said, look, you know what? Let's try and do something in the start. Let's do an offline card.
Mm.
All right. So you can actually go to every ATM using an offline card and draw money, or use an offline POS and still transact.
Offline.
Yes. But he wanted to also build a switch that could drive all of that transaction, the POSs, the ATMs, and then was bringing all the banks together to actually now form
To it. Yeah.
So he was going to build the first switch. So we partnered with a lot of people back in the day in terms of knowledge, and we got Visa to actually agree interimly to brand the card. That's the e-purse. But when Visa sent their guys from Europe, so the South African guys said, okay, let's go ahead. We're going to brand it. We agreed to go. Well, the first state capital, we're just waiting for Visa to say, boom. All the banks said, if you have Visa, we'll not put money, we'll also sign up onto the switch. Last minute Visa came and said, well, we can't take Nigeria risk. We're a 20,000 bank. Boom. That was what didn't go anywhere. So I think you and I had a conversation. Some of these things are too early for our market.
Yeah.
But then if you look at what InterSwitch...
What year was that?
SCCLX was 97, 98. We had bought a part of the switch because it was Postilion.
Yes.
Right? I think it's a Belgian company.
Yeah.
So we bought a part of the switch that would drive not the full, gamut, but enough to start the prototype, start with one or two banks, drive the ATMs, at least with the e-purse, and
they just refused.
And everybody wanted just a brand. They wanted Visa, MasterCard, or someone. And Visa just walked away, and that was the end of it. But then, subsequently, I think people like Michelle at InterSwitch and other, switching companies actually now learned from those things, including Value Card that didn't go anywhere by the way at that time, which was bought over, I think, by someone, I can't remember. But again, Visa actually came to eventually buy.
Yeah, to build UPSL.
But I think the ship had sailed at that time. If they had partnered with Louis, would have accelerated the payment system earlier than it was before that time.
Yeah.
But Louis was always ahead of his time. And again, that I paid attention to technology at that time. So I understood what drives that payment system, and more importantly, understanding the infrastructure and the architecture.
But I mean, forgive me for interrupting. How did you manage to raise money for a payment switch in 1997? Like, who were you raising money from?
I kid you not. It was such a hard sell. So we brought family, friends. Until today, somebody's still throwing shoes at me after losing money. Friends, family, and some believers, if you like, that actually did put some money to start this business. And we were burning cash, by the way. Every time we burnt, we went back and said, look, we're almost there, and they still gave it to us. I remember one of my uncles said, I ain't going to ever give you money to do anything.
Oh, no. He paid your school fees.
But then subsequently, he was always a risk taker in terms of, but he still went and did quite a few things with us subsequently. But yeah, you're right. It was so difficult. When you go and say switch, they're looking at you. What do you mean? What's wrong with cash? Because it was basically a cash environment. They're like, no, banks will never collaborate to build
do anything.
It's never going to happen. And that was before the banking consolidation. So there was cynicism around balance sheet of banks, and there was mistrust around, withdrawals and transfers and everything. And so it was really a difficult time to have done that. But Louis always knew what he was doing. Wow. Unfortunately, we just didn't take it.
You were too early.
Absolutely.
So give me a color of like the capital markets evolution of Nigeria, right? So you started telling us a story and you talked about how important I mean, one thing I'm learning is also, just like Mr. Adeyo, you started your career pretty much in public service.
Absolutely. Absolutely.
So I don't know whether people are seeing the patterns here, but just something that I'm noticing. And I would say even for me personally, that's one regret I have, that I never actually got to spend any time in public service. As early. No, it's too late. You guys have my hands, my legs, all you founders. I got a 10-year contract with you guys before I can go and work for. but I'm also noting that, so what happened after Sec Trust, right? So where did you go from
So
there?
actually, my life is tied to the growth of this industry in some way or form. I don't know how.
Yes, this is basically this industry is your life work.
That's it. It has been, and it has been anything else. So deal origination was at Sectors, right? And we were there. So I'm sure Gordon is going to shoot me in the kneecap when he hears me say this. So we were telling him that, look, Gordon, we got to scale. He came and told us about how Goldman Sachs is not a bank. And we said, look next door. IBTC is going to get then, started as well. IBTC is going to get a banking license. We have to get a license because every time we go and get some deal origination mandate, the first thing they ask you is, can you put seed money? At that time, it was important that you put seed money, not just to collect the advisory fees. Nobody will give you advisory. They say, look, if you think this is going to work and you want me to go this way, underwrite some portion of what you're going to do. Underwriting comes with capacity, with balance sheet, and only banks could do it. Or you have to go and borrow or partner with bank. We had Citibank as our partners. And that was why we were able to get some of these deal flows. I think Citibank at that time had just merged or had merged with Solomon Smith Barney. They had they have deal flow at that time. So some of the deal flows were coming to Sectors because they didn't have a license to operate. SSB was not going to come to Nigeria and start business. So we were getting some of that. And some of the knowledge transfer actually also came from there for us. But we were seeing how the market was moving. We realized that, balance sheet was going to be very important. And we kept telling Godwin, you got to move. Godwin just was stuck on his small, nimble Goldman Sachs type, we're thinking in Nigeria, it might not work. It's a mature market in the US, so you could afford to, not have balance sheet because you could go around and still raise capital and get underwriters to do it for you. So, we started seeing attrition because his focus was not aligned with ours. So Egwahede left, I left. Mizu stayed for a bit, but then I think he went to do his MBA in Harvard, and so also left. We left Ndidi also eventually left. So he now had to start building business. But then I said, okay, then Bola Rishola was CEO of Kakawa Discount House. The discount houses were built to actually create a buffer for the banks between central bank to create liquidity.
Yeah.
But then they are becoming obsolete because the market was now being very dynamic. And so they were looking to do other businesses. So Gordon used to send me to attend a meeting in the stock exchange. At that time, there was a group called Corporate Nigeria for Abiola, set up by the corporates. Then Ndi Okeke was DG of SEC, so she was putting all the top listed companies and partners to say, let's form a corporate group that will support Abiola for presidency. So I used to go for the meetings, and Bola was there, Aliko, everybody. So I got exposure to some of these people. God is notorious for not attending meetings anyway. So he used to send me everywhere, whether it was NNPC with his brother, where we sat down and wrote the first framework for marginal fields by the way, at that time. God is ingenious. He knows how to do things, but he's notorious for not coming to meetings. So he used to send me to that meeting. And I got familiar with these people. I was just a small child, according to them, in the midst of all of these guys. And, when you're young, you're fearless. So I could just say anything. And I was lucky because I came from a political background and I could understand some dynamics of politics and I could voice out my opinion about this is not going to happen, this is going to happen because I know a bit of politics. And so I became very vocal and my voice was being listened to at some point. And one of these days, Bola Rishola pulled me on the side and took a post-it note and said, how much do you earn in Sectors? I'm looking at her. I said, why? He So I want you to come and start me an asset management department in Kakawa. I'm like, okay, how are you transiting? Was it? Said no. All of that you know. How much is the salary? I kid you not, I looked at myself. I'm like, I'm about to just get married. No, I just got married. Sorry. I'm about to start settling down and everything. Let me see. So I kid you not, I added about 50%. I was just being cautious. I added about 50% of my salary on top of what is real. So I think that time was 1.1 million. I'd say it's 1.6. She said, times 3, when can you start? I looked at her and made a mental note. I'm like, I don't read. I said, can you do transfer? She said, when can you start? I'm like, Monday.
Wow.
So I went back to Godwin and I said, Bros, gee, I gotta go. He said, you're not going anywhere. What's happening? I said, well, I got this job at Kakao. I said, it's a small company we're going to build. I'm like, dude, she said 4 times. I said, what? I said, Jalo, I can't stop you, but what if I match it? I said, let me go back to her. I went back. She agreed a 5 times salary. I came with my rucksack, left. Of course, I had to finish all my clean my desk.
Yeah.
Gordon was so pissed with me, and I said, look, the guy has to go. The guy has to go. So I now ended up in Kakawa. I started the asset management company, or rather, asset management department in Kakawa. I had a guy called Tunde Shonekon first, when he's still in the industry. And we started building from scratch. We wrote policies, ideas, processes, investment guidelines, everything from scratch. So we were seeing that time where people were doing deal origination and getting some income. The trading was happening, but not on a higher scale. So there was not much of a prop book. Quite small because the brokers didn't have capital and nobody was going to lose capital in that, which was where we're seeing a small number of trades at that time. But there was a huge market for investment banking advisory because we're seeing movement in mergers, products around that were happening. But securities trading was still not very significant. Yeah. So now we were going to go into funds. So this was the idea about, look, you can't do securities trading without having fund because the fund will pipeline securities trading for you if you have a brokerage license. So one is assurance, which is asset management. The other is commission, which is trading. But investment banking is huge. There's something called the 7% spread, as you know. And it's investment banking, forgive my language, like throwing shit on the wall. You throw, you don't know which one is going to stick. If one sticks,
it pays for everything. Yeah.
So
like venture capital.
Exactly. So it's a little bit tricky for sustainability. Now, but fund management is assurance. So once you raise 100 million and your fees are 3%, you can plan for it.
Yeah.
And you can earn its assurance money. So everyone now started moving towards asset management. That's when I got to that industry. I will build a fairly decent business, getting mandates across most of the multinationals in terms of their funds. I remember Bola and I got on a plane and went to Port Harcourt to get the Total mandates, and we got quite a bit across the market because Kakao was also a well-respected discount house with the good corporate governance and all of that. And so from there, so you see, we went from investment banking, not securities trading yet, but then fund management. So first of all, is regulation.
Regulation. You started with the regulation.
So we went to deal origination, fund management.
Yes.
And then now, in 2007, there was the idea about the pension fund reforms had come. 2004, rather. That was when the PFA was, Pension Fund Act was established.
was established. Yeah.
So in my trips during the time I was going to South Africa, talking to Visa and all of that, trying to build ST with Louis, I made some contacts with some guys. Then it was called MQ. They were fund of fund managers. Clever guys who wrote some algos around. They will just do fund of funds. So they will raise money and just give funds. So they don't do the fund management themselves. They raise money and then allocate to funds. If you're index is this following this particular pattern will follow if you have this characteristics. So they just allocated to funds.
Yeah.
Made some money. I think somebody bought them out. And then they heard about the pension market was coming to Nigeria. And so they like came on a plane and then decided to get a license and partner with some people. So Bruce now said, Jalo, what are you doing in asset management? This is going to blow. I said, I agree. So I joined them as also a stakeholder in it. And I became the CIO at that time, Chief Investment Officer for that. It was a brilliant ride. It was going to blow. It was growing. But as we were going, we needed capital, which is the key thing about Nigeria. Capital is shy when you have new ideas, especially at that time. So Pencom raised the, I think minimum capital from, I think that time was 300 to $1 billion. And these guys were like, guys, this is the biggest risk we're going to take in Nigeria. So let's look for the capital locally. We went around trying to raise 1 billion. It was difficult. There were only 7 of us were licensed at that time. It was called First Pension Alliance. It was one of the first licensees. And we had acquired, RSA accounts or RS accounts like mad. We were public sector everywhere. We pushed. I had office in Abuja, but I was running Lagos because I said, look, we can't leave the corporates around here. Some of our shareholders were Abuja based. End of day, struggling to raise capital. We brought in some new shareholders. It was a bit tricky. And then I was trying to figure out what to do with the PFA. In between all of that, Tony and I have been talking around, things. Jalo, you got to work for Standard Trust Bank. I'm like, no, I don't want to work for a bank, investment banking guy. So you see, we're moving from pension fund administration. So we move from investment banking, asset management, pension fund, which is a higher version of asset management. And then, of course, the market was blowing up because the PFAs have come. They started putting money. International investors have come. I think they removed us from the grey list of FATF. Yeah. There was a lot of reform happening in 2007. Obasanjo was really bullish. GSM had come. Everything. Nigeria was really a destination. We now came on board on the MSCI index, emerging market index, and that really took our markets to a different place. So Tony and I have been talking all this while. I know him, my friend. So one day, my wife and I were going to. So I'm from Gombe, in northeast part of Nigeria. We have an airport in Jos at that time, but I think the airline that was going there went bankrupt. So if you're going to go to Gombe, you have to fly to Abuja from Lagos and then drive down. So I'll do that Friday, come back on Sunday sometimes, just see family and friends. So I was driving to Abuja, and then I got a call. This was not Friday, it was Saturday. Tony called me and said, Jalo, where are you? I said, okay, how are you? Blah, blah, blah. I said, I'm on my way to Gombe. He said, you want to go and marry second wife? There's no room for you. Jokingly, and I said, no. I said, no, I know you. I'm like, okay. My wife, he said, okay, let me speak to her. So he spoke to her, how are you? Blah, blah, blah. I said, don't mind husband, give him back the phone. He says, Jalo, I'm offering you a job. I said, what? Finally, what? I want you to come and turn around my brokerage firm, which is UBA Stockbrokers, because he had now merged with Standard Trust, had merged with UBA at that time. Yeah. He said, I want you to go and make me money. I'm like, okay, this is new. So how do you do that? He said, when are you coming back? I said, Sunday. He said, okay, I'm going to Ghana, but I'll wait for you. We'll have dinner in my house. We'll close out. Came back on Sunday from the airport, went straight to see him. He said, I want you to go and give me a PowerPoint presentation. How are you going to make me number one stockbroking firm in Nigeria? Again, the stories around how markets were moving, how moving towards where markets were. Securities trading was big. The prop books were now getting larger and larger. The banks have understood that the stock market was hot and they're not cashing in it. So, met with him. I asked him to give me 2 weeks. Think tank came around and showed him a proposal of how I could make it at least top 5 within 2 years, and then we can now scale up. So before I even joined, he had been calling me, come and start. You know how Tony is. If Tony wants to tell you something, he is going to get you to do it. So I was supposed to start 1st of June 2007. By May, I was coming to clean up some things because they had gone to do share loans and the execution was at the stockbroking firm and they were lacking capacity. So I used to come and try and clean up for them. So I joined the UB and the first thing he did was give me a prop book of about 30 billion naira and says, go kill. I'm like, I still have non-proprietary. Say, I know you have to do both. And I need you to turn around this thing. I want to be in top 5 in 7 months, not 1 year. So we went to town, built capacity, brought some of my teams from other places, set up a very nice shop at UBA. And behold, by the first year, I think we were decently number 3 or number 4 in terms of volume and value traded. And in terms of number of clients, at that time, we were number 1. I think we had maybe 18,000 clients, which was huge that time. We had a prop book, we had a execution mandates, we had the share plus loan, which we were doing. But the back end of the risk management was not there at the bank to monitor those loans and which happened to every bank.
Yeah.
Just UBA. And so I remember one day Sanusi was CEO of First Bank. He called me, said, Jalo, I know you know this business, you've been in it. What do you think will make this market crash? No, he was chief risk officer. He was ED at that time. He wasn't MD. And I said, well, it's people like you that decide that enough is enough. And when you pull the plug, everybody else will do it. He says, is that all? I say, yes, because you guys are not monitoring this market. You don't have any sophistication in terms of how you do it. Is you aggregate Excel sheets and you're not watching it. You don't know what risk you're carrying. You don't know the quantum, but you don't know where it is. You don't have tools to monitor it. And it's going to happen. 3 months after I became CEO and 2 months after the market started crashing. Because Stanbic started moving, First Bank moved, and the rest also copied. UBA, of course, did the same thing. Yeah. And then from there, he says, you know what, leave this brokerage. I'm bleeding here in UBA Asset Management. They had lost 1.7 billion. He said, Tony, I came here to do only securities trading. He said, well, Jalo, leave this one. No, market is slow. You've made money for us. Go ahead and fix this one. So that's how I moved to UBA Asset Management with a balance sheet then of about 27 billion. So can you make us number 1 again? I said, why not? But I need tools, people. I need to build technology to be able to serve the market properly. So we set up 4 funds, went to 40 billion in less than 18 months.
Wow.
And turned it into profit by the second year. Actually, the first year. And I was getting tired of this, So Felicia Phillips had called me to say, there's a role at the exchange and you have been there before. And I think because of your experience, you can help us sort some of the things that have been there. Because Indio Kereke had been asked to go, and they brought in an interim guy, which is the Kazobo. So they were looking to fill, they wanted market people to help the reform that was happening. And I like reforms anyway. So I interviewed for the CSCS role with Kari Bukar, who was the former CEO. And he was my senior, by the way, and genius, by the way. Guy, I think first class, worked for HP. He's a nuclear physicist and all of that. So brilliant guy. And so I didn't get it. He got it. So I continued. But then I think 3 months after, Felicia Phillips called me and said, Jalo, there's a role as ED. I know you don't at the exchange, and this is your role. I'm like, oh, this is interesting. So I went to interview at the council. I went back to Tony. I said, Tony, I'm moving to the exchange. Say, I would have wanted to be CEO there, but it's okay. Go. You'll be of help to all of us. And you help change the market, which will support what we're doing in terms of building businesses. So that's how I landed at the exchange proper. That's my second time coming as an ED. But then you can see how the evolution of the market has gone.
Yeah.
So now governance became a very important issue because we had lost some of that in terms of the trust element was low between investors, intermediaries, and the exchange itself, and even regulators. And so the idea about coming there to help reform the market was, for me, very interesting. So we went with Oscar, spent 5 years. That's how we built back the exchange in that 5 years. Now, having done that for 5 years, the opportunity at the CSCS came up again. And it was particular for me to go and do what I did at the CSCS because I was banging my head because I was responsible for order flow, new listings, products, trading, everything. But the back office wasn't working. The CSCS wasn't working the way we wanted to. Error trades, statements were wrong sometimes. If you go to CSCS, you find the whole building, brokers are standing trying to get things done. So, and I was there banging to see order flow when the back office. So when the opportunity came, I'm like, look, let me go and interview for this role. So I did. Shola was chairman of the governance committee. And so I got the role. 7 years after, I'm here talking about my life at
amazing. But that's a whole, you did the whole breadth.
I kid you not.
What would you say the biggest lessons were from just building broken things again and again and again?
So the lesson was that my first time at the exchange, you cannot manufacture corporate governance.
Cannot manufacture corporate governance.
You can't. And once there is a bit of governance doubt, markets need confidence. Even if it's not deliberate. All right? If you don't have that, then the gambit of what you're doing, especially capital markets, this is other people's money. There should be a trust element that I trust the intermediary of license. I trust the process that you have. I trust the depository that every time I come, it will give me what it is that I have. And I trust what's coming out of your market. I trust the companies that you list. All right? That they won't go anywhere because you have rules, regulations, and they follow by it. And once some element of it is missing, it crumbles. And once that doubt is there, you can't raise money. Nobody can. And so my first lesson is about corporate governance. The second is that you can't do anything without technology. And you must know it. You can't just say, I'm buying technology. I want this piece of hardware, or I have the software that's going to do something. You must know how it works. You must know the benefit of it. You must know how much it costs you. All right? You must know who will run it. Because technology folks can run away with you. I think the last thing is that whatever you do, in the heart of what it is that you have is this talent. See these young people that are following me around. Nnameka has a PhD in strategy and he works in my office.
Wow.
Edidion has significantly been in this market in terms of communication. In fact, what she reminds me that back in the day, they used to go interview me in China. I'm like, I can't remember this young child. But again, which is what we focus on at CSCS. And wherever I go, to be honest, talent is key. And not just getting it, but nurturing it and keeping it. So those three things are, for me,
the biggest.
And maybe to add to it, which is part of talent nurturing, is that you must listen to other people, especially those young ones who are coming up, who, when you were young yourself, were very impatient with your because they can't see what you're trying to do. But I think the older ones must listen to the younger ones and have an open mind about a few things. So, as you know, the workplace has changed from where we were coming from. The way the work is done has changed. The people that do it have changed. And the way it's being rewarded or compensated has changed. And I'll give it some. When I was at the exchange, we used to have this, what's it called, internship program. And I used to attract a lot of the interns because I would go there during their training. I'll speak to them about how they should come and work with me rather than any other person. So I used to have the highest number of applications to come and work in my division back in the day. And so every time they do something great, maybe we did a listing or something, And I now send an email to everybody. I say, oh, well done, thank you very much for this. Or I talk about it within our divisional meeting. They say, okay. The day I pick up my phone and go on Twitter, right? And I say, hey guys, we listed Seplat today. I tag all of them. I say, you did this, you did this. And that day I'll get 1,000 responses. And they come to me and say, thank you. So the way you reward them has changed. If you write an email and copy everybody, that's not how they see gratitude. Go publicly on Twitter, on Instagram or LinkedIn, and then call them out and say you've done well. That's how to keep them. So I began to understand how to, communicate appropriately with the younger talent. And for me, that's the greatest thing I've seen that's working for me up to now.
That's incredible. What would you say, like, as you think about the things that have been built? I mean, you saw a lot of companies because you're basically an investor's investor.
Absolutely.
So what set apart the people who built durable enterprises and were able to raise money, but also return the capital to investors from those who just crash and burn?
So there is, apart from the timing issue that we saw with people like Louis,
timing issue.
Yeah, as in if a product is not ready, the market is not ready. You just have to wait, cool off, and then find time to come back to it. One thing I've always seen with those people that I've seen successful is clear vision. Where is North South? Tony has always said, I want to be the biggest bank in Nigeria. Now said, I want to be in Africa. I want to also enter the world. I want to be able to be resilient and diversified, not just from banking, but banking should fuel industries that we can invest in, which is what led to S Holding, being a holding company that also distributes capital to invest in other companies. If you look at someone like Dangote, who says, whatever Dangote is doing, he says, I want to be the biggest, I want to be the first. If you look at Femi, gregarious as he is, with a sense of purpose, say, you know what, I'm going to. And when they say I'm going to, first of all, they understand it. And by the way, they also use subject matter experts. So don't think you're the only one that knows it. McKinsey, when they came to Nigeria, were embedded in Dangote's office, in Dangote Cement. Yes. Tony consistently uses BCG and a lot of consultants to help thinking. I don't know what people think about consultants, but Tony was hiring talent globally in Nigeria. Everywhere. If you knew you were good at something and you would hire you, keep you inside place. Got people that are always thinking. But I think it's about, being persistent and being disciplined about doing it every day. They don't think, okay, we've done this, it's not worked. They would try it another way. You'll go again and do it. So being consistent is very important. It's not just, it didn't work. And then you move to the next one and next one. They were there. Igboji, late Herbert, they were banging on it. We got to do it. This is what we want to do. And they kept trying. They changed the face of banking in Africa. Back in the day, I remember at least Ghana was an example that I could use. When the Nigerian banks went there, the Ghanaian customers have never seen a bank manager come to their office. So they were surprised. What are you doing here? That's Ohi's Obiaho. He went and said, I've come to see you. He said, no, I'm coming to you. He said, no, I'm coming to see you. And when word went around that he was coming to see customers, everybody said, who is this banker that's coming to come and see me? I'd like to bank with him. So they flipped the way banking was done. And again, this consistent, resilience, gather knowledge about what you're doing. But most people have a North Star, know what you want to do at all times.
That's very powerful. As you think about the future of capital markets, because it's something I think and talk a lot about, where do you see it going? You called securities prop trading before everybody did. You called PFAs before everybody did. So what's next?
I think a decentralization is the way it's going to happen.
And how are you preparing for it?
Now that might be a conversation for another day, but I can give you some perspective. A decentralization is going to be key. See, again, this infrastructure is where everybody's going. The only thing I take with me all the time is my passport, my phone. If Nigeria had Apple Pay, I won't even take my credit card. It will just be this. And everything is inside here. And as we go along, it's going to get better and better. And so this is where I see markets congregate. This is where I see trades happen. This is where I see settlement happens. This is where I see product selection, advisory from a functional perspective. So I see a situation where I think somebody asked me at my board meeting yesterday, almost similar question I asked. I see a situation where I download an app, I log on to it, do my KYC instantly, add my bank account or credit card, and and I give all my details. Maybe it's a form I fill, or I allow it to go and pull my data from somewhere, whether it's hospital records, my financial records, with open banking and all of that, or my school records, my health, my pension records. And in that, a financial model can be built for me in terms of what should I invest in, what's my risk tolerance, looking at whether you have children in school, you have a hypertension, you have some disease, so which means it will spread and say you need cash to support yourself. You have to buy an insurance because you're getting older, or you need this. So it will aggregate all of your data and begin to give you a portfolio selection of how you should make an investment. Beyond that, it will also help you with payments. So if you have regular payments, let's say you pay your insurance, you pay your DSTV, if there's going to be anything like that anymore in the future, not very far away. But what it will do is that when you say okay to do that, with the connectivity and interfaces we have, it will go and buy any asset for you, irrespective of which market, irrespective of jurisdiction or geography, irrespective of product. But you all aggregate and it's in that one-stop shop. That is your broker, your investment advisor, and could add lifestyle into it, other things. So once you have that, then traditional markets will shrink into providing rather than being the one, determine, if you know what I mean. So companies would begin to look at how do I raise capital in some form of shape without all these intermediaries coming in. And so an issuer can just come into a platform and say, I need to make 100 million, which is why you're going to crowdfunding, I believe. Yeah. And you raise it irrespective of whether or not, the approvals and rules will be set within that system, and you follow it, you file, you do everything instantly, and you raise your money in 2 or 3 hours and you go and deploy. Yep. So I see the traditional houses there won't be intermediaries as far as I'm concerned. Well, there won't be physical intermediaries. So the brokers, the custodians, all of them will be. Banks will have to metamorphosize into something else, which we're seeing the payment companies go into it. So today, Revolut, all of these banks, they don't have anywhere. It's just virtual, and more and more people are beginning to go that way. I don't want to carry a card, for God's sake. My phone should be able to do everything for me. Even though we are moving to that perspective in Nigeria, where you have banks that have really developed banking apps that are really solving problems for us, not carrying cash or card. And I think I must give credit to them. But that's what we are doing. And capital markets are going to go that way. I see more private markets coming, less regulation. Regulation will be done by how you behave and how money goes to you. If you behave very well, you get rewarded. If you don't, for us at CSCS, I think we are moving towards ensuring that in all of this, we support all the platforms, whether private markets or big ones or small ones, because at any point in time, you need a trust element. Yes. Which is a custodian. And so we continue to provide that, but in a different format than we do currently.
That's incredible. And so CSCS essentially becomes registrar, custodian.
We we already are. So
Yeah,
we're
yeah.
transfer agent. We are source of the golden truth. And all of the trades that happen, we actually do the transfer instantly.
Yeah.
And we just
And you can do this for private markets, right?
absolutely. Absolutely.
Anyway, so
And
we'll have a
build some
conversation.
technology and capacity to be able to do that right now. So we started this API game that everybody was going to go and plug to us indirectly or indirectly to be able to do all these public offers that are called automated.
That's incredible. Because I think that has a potential to change how people fundraise.
Absolutely.
Yeah.
Absolutely.
We're almost getting to the end, so I just have one more question, and I'll let them ask questions. Both from those that are actually watching on the live stream. You can put your questions in the chat. We'll get to them, and then those of us that are here as well will get to ask questions. So I just want you to start getting ready. What would you say your greatest achievement, right, has been?
That's difficult to say because I haven't gotten there yet in my mind, if you know what I mean. So it's difficult to count when you have not finished.
But what service are you most grateful for?
To be honest, I think is empowering the young ones within how I've touched them in my career. Whether it's starting at the NGX, moving to the SEC, and helping build those guys who need to be lifted up, to be given an opportunity to excel, either within the office space or within their own, private lives. Build people to get better and better within the small framework that I've worked. That has been my biggest joy, if you like, in terms of how I see my role in the market. It's just building people.
I'm a big testament to that. So I'm very grateful for that.
It's building people, actually.
Yeah. And then finally, I mean, what would you advise young people to think about, as they're building, like I started, it took you 30 years to build what everybody's enjoying today, instantaneous IPOs, all this stuff. For the young people who have to do the next 30 years, what are you seeing them do that you're like, stop? And what do you think they should be doing that they're not doing now?
So I think young people today don't read. Their attention span is very small. You cannot replace knowledge. When I say knowledge, I mean basic knowledge. The discipline to be able to read and compare. My mother used to say nothing you read is useless. Whether it's a piece of newspaper you pick up, you read something, it sticks in the back of your head. Whether it's a book about, World War II, it sticks in your head. Whether it is about revolutionary things like what, say, Steve Jobs has built. I mean, it's not the same as building. So how Rockefeller built the empire is different from how, Jeff Bezos or Microsoft did. They're all different ways. But there's something common about them in terms of how businesses are built or how people grow as human beings. And there's just this consistency about what it is. Character, resilience, and people must trust you when you say something and you do it. But I think the ability to first wait and learn. So it's like when they hand you a new appliance, and then there's a handbook of us. Many of us don't read that handbook.
No.
We go back when we have a problem to go and check it. But do you know, whoever reads that handbook, if he has time to do it, is actually better user of that particular thing.
He knows everything he can do.
Correct. And then he becomes the center of knowledge. You call him, guy, I know you know about this thing. You use it very well. Can you help me? How did you do this? You become the reference point. And people like consistency about human beings. I think they should read more. All right. And pay more attention to just other things. But I think more importantly is understand what they want to do. Because even when I talk to my kids, they are late teenagers and all of that, they don't seem to know what they want to do. They're like, well, everything's up in there. I like this, I like this, I like this. It's important to have a North Star. Even if you like 3 things, stick with 3 things and say, let me get better at 1. I hope they're able to do that. And also, I think, if you ask me, less of social media.
I agree.
Because it really kills you. Someone sent me something, and I think I posted on my WhatsApp status today. I've not done that in a long time. It says, scrolling is the new smoking. It kills you. Because you can see someone just like that, hours and hours consuming garbage. And then you believe that this thing that's there is actually the main issue, which is why they have a lot of mental issues, mental health issues, sorry. I think they should pay more attention to the real issues, like reading properly, talking to people. I hope the ship has not sailed, but when you talk to people, you also get to engage and learn new things. They should exercise more, because they're never exercising, these guys. Because your brain thinks when you exercise. Otherwise, I think young kids are the future. Whatever it is, they're so brilliant in how they adapt new things and quickly. So it's not all that bad. If just a few things, like I said, pay attention.
Yeah.
So that read, it's very important. Yes.
Fantastic. Okay. Well, let's give Jalo a round of applause. So we're gonna take some questions. Are there any questions from? Okay. Okay, we'll take some questions in room, then we'll have questions. All of you, please feel free. You can ask any questions. Yes. No, but you feel free.
It's an enforced resolution, but I'm happy to share. I would like to share.
Please.
I think
just because of the mic, you use the mic. Just because we are mic'd, so we can so that they can hear you.
Yeah, I think for me, I've been very
Come closer to your mouth.
very fortunate.
Yes, exactly. So please say your name and say what your company does. Yeah.
My name is Obola Joami. I'm one of the co-founders of Recital Finance, a financial operations infrastructure company. Essentially, we help businesses, enterprises, their financing specifically, observe their transactions and track their cash anywhere in the world across any financial system in real time.
Interesting.
I've been working professionally for about 10 years, actually, 10, 12 years. And I've been very fortunate because I had a very interesting background, fairly rough, dropped out of secondary school, didn't have tertiary education. But I was lucky to get into the workforce straight away, right? I've been very fortunate, and I think I've taken it. So like I said, I don't have any tertiary education, which most people do not know, except I say, sort of grown up to the level of chief growth officer before joining Cycle. Recently, I then took the plunge to say, okay, let me go get some level of extended education, maybe an EMBA. So that sort of reinforced with this conversation. Because you mentioned, there's certain things you mentioned that spoke to pockets in your experience that really were based on the quality of education you had, or even the quality of talent you attracted. And I think that's one gap I need to plug very quickly.
Very good. Very good. Go get that EMBA.
So if I may comment,
yes,
to be honest,
yes, you can.
So when I say knowledge, people go to school and come out and they're illiterates completely. So it's not just the classroom, it's applying the knowledge that you gather. Not hook up, line, or sinker, and then you swallow, you regurgitate, and then you go. There's no process that follows around deductive thinking. I don't encourage that. I can hire a past degree guy taught class, knowing that the person can think independently. I'm not a fan of an exam driven situation. It's a good barometer in the beginning to set things, but eventually it's your ability to apply your knowledge or your head that matters to me more than anything else. And I think even with his PhD, we still fight in the office around other things.
It's not easy. Your PhD strategy. That means he's fighting wars. Awesome. Do you have a question? Yes.
Hello, Mr. Jalo.
Turn on the mic.
It's on. It's actually on.
It's on? It's on?
Yeah.
Okay.
I can hear it.
Mr. Jalo, my name is Humphrey from South Africa. We're enabling cross-border investing in stock markets. My questions are two, and they're slightly technical. One is Africa's capital markets are tied to foreign investment flows. We have seen all the gyrations, and I'm drawing my question from what has happened in the UK and in Singapore, where they created special derivatives called CSCS, contracts for difference. Would such a product work in Africa for them? And my second question is, Africa's capital markets, the constant theme is lack of liquidity. I think CSCS is doing something along these lines of lean accounts. We want to call it security-backed loans, in the sense that you can pledge your security as collateral, access some money for some time, and replenish bank account. If we automate that process in real time, then that enhances liquidity in our capital markets. Thank you.
Very good question. So is there a market for derivatives in this market? Absolutely. If you look at the pension funds, my pensions are with one of the pension fund companies. But guess what they're investing in? Treasuries and bonds, mostly short dated. All right. And then some 10% in equity. Maybe I'll start drawing my pension in 5 or 10 years, but have you planned for me? Have you hedged that my demand in 5 or 10 years time? They haven't, because all of the instruments are actually built to return money for 2 or 3 years. Meanwhile, my demand is actually further down. So the people that should ask for derivatives instruments are actually, first and foremost, pension funds, whether it's interest rates, derivatives, whether it is credit, just make sure that you hedge against what's happening right now, because in future I'm going to come to you and say, give me my money or give me some money over time. I haven't seen that happen. We tried to build the derivatives market. I think that we went slightly the wrong way by doing index futures when we should have started with single stocks. And we should have agreed to do, when I was there, agreed to do naked short selling to allow for securities borrowing to foster, because Nigerians were so afraid of credit risk that if you do anything without cover, it becomes a problem. So yes, there's a market for it. In fact, when I was at exchange, we started that process by starting with the CCP, which is NG clear. In the derivative market, you need a CCP to take away the risk for inter-members across markets. And we wanted to make it a qualified CCP. They are still on the journey, and we wanted to make it only one, because today we have 2 CCPs in this market. I don't know, it's crazy. We should have had one, because one can take the risk across everyone, and then you have more
risk,
exactly.
which makes no sense. Yeah.
That's why I think there is the models that they saw in Singapore were actually driven by. So the CFDs were built on other markets. So some of them came from the Hong Kong exchange. So what they did was took the underlying at Hong Kong and then listed them in Singapore to trade. So they took other markets liquidity and actually did it because in their own markets they were smaller. But since then they've actually improved. In terms of collateral management, funny enough, at CSCS we automated that already. So today, a chief risk officer can create a lien and can remove a lien, can increase it or reduce it. And with that system, they have a dashboard that has limits up and down with that system, and can, if you like, add a middleware for us to be able to say, send the message to the credit officer and say, ask for more collateral. You have 2 weeks to do it, or 10 days, or you have this threshold because the market is going this way or that way. So we've built the portal. The APIs are not ready for them to connect to their credit systems, but that is already in place. Nameka, if I'm correct, we haven't sold it the way we should, but I think 1 or 2 banks are already testing it. So that, I think, is the way, but that's within the CSCS garment. So we can only do that with the instruments that are in our custody. But what you're saying is with other assets as well. So that could be a brilliant idea if you ask me.
Yeah.
So today, from my viewpoint, the market for most young people is one that is, I would say, small. Right? You have a lot of young people who are not really investing in stocks by a very large margin. Now, I'm not sure whether this is really CSCS responsible. What do you think is the gap in distribution in that sense?
So the first answer, and I always use that, my son is going to probably say that, stop using me as an example. He says that if you buy stuff from Amazon in the morning, it delivers midday, right? In the afternoon. And if you don't like it, you send it back, you get your money, right? He says, why would I come to your market and buy assets and wait 3 days before it's delivered? And when I'm selling it, I wait 3 days before I get my cash back. 6 days? Come on, guys. So the first thing you need to do is accelerate the settlement.
Yeah, accelerate settlement.
Take it T+1.
So what's the delay?
So we've been propagating this for the last 2 years. We finally got some nod 2 days ago, am I right? By the SEC to say Monday, right? We got it on Monday to say go ahead and execute. So in 6 months, we're likely to move to T+2, then T+1. My idea was let's go to T+1 and then subsequently T+0. And everybody knows that. We've been ready ever since. So when you move today, you can transfer money to anybody instantly across in green farmland, whatever it is. You can still get your money instantly. So why can't you settle instantly, or at least same day?
What's the but it just is the only reason why it's just the regulator doesn't allow it?
No. So their interests are enjoying this float between T+2 and T+3.
Okay.
And when they sit on it, and also they're not efficient from the back office end, they have to do some reconciliation. They have to build systems that will allow it to happen. They've not invested, to be honest, in their back offices for some time, and they need to do that. And they're the ones dragging and letting us down. Otherwise, at CSCS, we can do T+0. End of day.
How does one, if somebody invested in their back office, can they access T+0? Is it legal for them to do that?
No, so there's some brokers that actually give you settlement that same day but at the cost. So for example, you traded today, I've sold your shares, but you can wait 3 days. If you can't, I advance you 90% of the cash, take my commission, and then when it settles, I give you cash. It happens already. It is there. So and there's a demand, almost everybody comes to the market. I'm in a hurry, I want my cash. Why should I wait 3 days? If you have I talked about instant gratification with the kids that I'm talking about when I was working with them. Today, everybody wants something instant. Everything is instant. News is instant. Gossip, which is good, is instant. Everything, reward, cash, whatever. They call it Azu on. Is it? I really don't know what that means.
Yes.
So yeah, if you do that, that's the first step. Okay?
Yeah.
The second step is to simplify the products to their needs. The products you are selling is equity. They're like, who is this company? What do I want? make it so things like tokenization of those assets, they understand it, digitalize it, make it something they can see, provide the information in the format that is wanted, and bring those companies they can identify with. Not companies that are manufacturing in somewhere, they can't understand why do I need diesel. So new economies, yeah.
Yeah.
I mean, that is one of question for tech companies. Let me not use tech companies because that's not right. For startups, right? Every tech company is a business before the tech. For startups, that how not sure the right way to ask this question, but what's the best way for startups to grow AI?
I always say this: start small, POC, be consistent, understand the market, then scale gradually. I think it was you I was talking. We were talking
Yeah.
about some people just go and open office and buy servers and say I want to start business. That's not how to do it. Start small. All right. Understand your markets, apply your capital appropriately, and then scale up gradually. But more importantly, be there.
Mm.
Don't abdicate your responsibility.
Yeah. Dominique wants to ask a question. I mean, we'll make that the final question before we go to the. Yep.
It's Dominique from StreamPay. We are building a connectivity and infrastructure platform to make certain digital services internet free.
Oh, interesting.
Local cloud infrastructure in Africa that's interconnected with the mobile operators and internet service providers. And then we're able to deploy local solutions on that platform. And we're able to get data resources at a very discounted price. Then we can bundle it with certain digital solutions so the data is bundled with micro subscription services.
Tokenizing data services. Tokenizing services.
So I wanted to ask a question a bit personal. It's two questions, but it's probably the second question is going to be connected to the first one, which is where do you see yourself in the next 5 to 10 years? But the reason is, and he asked the question differently, which is, your journey and what you predicted would be next. I want to know more, where do you see yourself, what's going to happen next? And I wanted to connect this to the second question, which is, 20 years ago, you were probably talking to Tony and and you were turning around companies for them and making a lot of money. You talked about early days. You're talking about coding in 1997 and excellent coding that you. I think once or twice you mentioned about trying something. Maybe timing was not right, partnership didn't work. But shouldn't you probably, with this wealth of experience and this journey, how close are you, for example, to Tony's net worth? Was that ever a drive for you? Is that something you're projecting to see in the next 10 minutes? One of the top 10.
What's your North Star?
My question is clear.
It's clear.
This is a question my wife asked last year in a different format, by the way. So I've acquired this vast knowledge and vast network. Some people are not just wired for money, if you know what I mean.
Mm.
For me, the way I see wealth is you calling me in short notice to come and sit down here and talk to you guys. For me, that is the biggest wealth. My mother used to say that your Rolodex is more than how much cash you have in your pocket. Ability to call somebody and say, hey, can we do this? Can you do this? Can you help me do this? For me, far outstrips whatever stock options I have in CSCS or anywhere else. So my focus go forward would be, how do I, aggregate that and turn it into a better thing for the community, or for my community, or for my people. And my people are people like all of you that I've met here today. Go forward. But it's just, it's to connect everything and help grow other people. Either by, mentoring in some form or shape, or sitting on boards to guide them for 2-3 years and move to the next one. So like I now get bored of sitting on boards. But again, just help people.
Yeah.
And we have a common friend who consistently, I think Namika has refused to approve for me to sit on his board. Empower. Empower. So that kind of thing. I see myself actually, being part of assisting companies or people, and it has to be just friends and family, not just for the income, to spiral out of what they are and help them move further. And by extension, helping the ecosystem to be a big one. That's what I see myself doing.
That's amazing.
After I leave the CSCS.
Just once, yeah.
So, in a fascinating way today, are you choosing to settle for that? Do you ever feel like, maybe it could have been more and bigger? For example, if you were to advise, someone who has a great drive to say, I want to be one of the top 10 people in Africa, versus I want to get all this knowledge and grow this network and knowledge, and then at some point I just want to be advising people and guiding them and mentoring them. Is it just something very particular to you?
So I would have chosen the money. I will still choose the money. Don't get me wrong. But I think, as maybe it's the way I was brought up. Maybe it's the ability to be
fulfilled,
correct
self-contented
for every day that I live. I'm not, again, maybe the background also helps in terms of how we were brought up. But yeah, it's important to chase wealth. That you cannot not but do that. Would I have done it differently? Maybe, but I think I like the way I'm doing it. I leave the wealth creation to all of you guys.
If I can say something, I would say, I guess before we take the final question, so we can let Uncle go. As somebody who's been asked this question, I'm definitely not as wealthy as many of the people I've built companies with. I'll say that for free in public. I'm definitely not as wealthy as people imagine I am. But my piece, and the way I've thought about what I want out of life is, it's more important for me, very similar. And maybe that's why I'm drawn to people like Mr. Jalo and Mr. Diayo. We're not the kind of people who necessarily care a lot about the wealth, the financial success, or even the public credit. But what you really care about is that something was built well. You know what I mean? And that it was done, and it doesn't matter who got the financial returns or the credit. So I think it's a personality type. I would never be comfortable being a billionaire. Personally, I just wouldn't be, because it would so constrain my lifestyle that I would just not like it. I wouldn't be able to show up at places like this. I wouldn't be able to live where I live. I wouldn't be able to go where I go. He wouldn't be able to drive to Gombe. So, after a while, you're just like, look, I'm not, it doesn't make sense. Okay. I'm going to quickly take that question so we can let him go.
Sure.
Okay.
So I think Mr. Dale last week had said,
wait 1 second. Let's try and play it again with the mic. The mic is here. We'll play it again with the mic just for the recording. Pure Life Health.
Okay.
Yeah, the pharmacy.
Cherry, sorry, I'm driving, so I just wanted to leave a voice note. So I think Mr. Dale last week had said that he doesn't understand the stock markets in Nigeria because there's always like a downtime. The markets just the prices will stay at a particular point, and then suddenly there will be an uptick, and then it stays down again, or it stays that way. Against the traditional or the more advanced markets in prices, right?
I think so. That's really what my questions are. Like, why is it that way in the Nigerian market versus other more advanced markets like the New York Stock Exchange or CME or HKSE or LSE and the rest?
So we've done a study on that. Liquid Matrix came and we were trying to, and what Solade was trying to say is that, if you look at the graph, the X and Y, right? And then the two things, price and volume, right? The spreads are wide in the morning. So when the market opens, they're wide. So no activity, generally across all shares. And then by the time it goes to 12:30, we'll start seeing activity in the market for some of the liquid stocks. The question is, what happens in the morning when the spreads are wider? So bid and offer spreads are wider in the morning. And it's when they close that you have execution. And if you take every single stock, in most cases, that's what happens. Unless you have a negotiated deal that happens in the morning and everybody goes in the evening, the guy has gone off. The reason why that happens is two things. One, in the morning, brokers are doing mundane things. Looking for research, going to do reconciliation, calling on mandates, putting them on paper, keying them into some format. So that morning, no activities happen. Markets move with information. Information that happened last night, pipeline was blown up.
Yeah, market should have.
By 9 a.m., markets should start reacting to it. It's not because they are doing mundane things.
Interesting.
And so long as you have manual things and brokers doing this work, the velocity of trade, you will not see when things happen. And the volatility in terms of volume will be there all the time from an order flow perspective.
So that's a money-making opportunity.
It is absolutely. So you got to compress that bit of offer spread in the morning. Otherwise, you can't see it. We tried by saying, okay, what are the tasks that brokers do in the morning? We tried to automate most of it. Still, we only have people, having 6 brokers on our API, the rest use the broker portal, which means the same manual business. That has to change.
How are there companies building technology for these brokers?
So there are 2 that have built some solutions for them from an order management system. I think Zanibal and what's the other one again? This other one. I remember their name.
The ex-Microsoft guy.
No, he's not. This guy is very local. I've forgotten the name. Very popular solution. Anyway, there are 2. No, not CWG. CWG is more the OEMs that come and these guys built local proprietary trade.
So there's an opportunity to build there.
Absolutely. Yeah, especially the back office end. Light, nimble,
simple stuff.
Yeah.
There you go, another $1 billion idea.
So that's you.
I'm gonna end with this one. I'm very obsessed with real world assets and yield. What are your thoughts about how the market can start to incorporate real world assets? Like, you look at a move, that's 30,000 cars all over the world. That transaction should have been done in Nigeria. I don't know why it did.
Sorry about that.
Yeah, no, it's fine, please. Sorry. No, it's fine.
I think it's also calling.
Okay. So what is your sense, as a final question, what is your sense of how that world, of real world assets is going to change over the next, especially now when the country badly needs, productive assets in order to be able to grow back the economy, especially given low wages and so on and so forth?
So transparency is very important in this case. People have to know. So markets generally in the world exist before others come to organize them. You know that.
Mm-hmm.
There's a market for currency, it's black market. They call it black market. But that market has always existed. Nobody has come to organize it. I think FMDB tried to do it on only one contract, which is not still working. Federal government is still funding. You got to organize it. There's a cattle market here in what's it called, Alaba. If you go around, you can organize it and put technology into it. The property market is so great here that if you organize it again, you can unlock the whole. I mean, our biggest wealth in Nigeria is in property. Your parents have property. Your parents, okay, you are Kenyan. Parents have property. If you try and sell your father's property, even if they're not going to give it, you'll be seen as a bastard child. Yeah, it's cultural. But if you try and find a way to unlock the value of that particular thing, without people saying outrightly sell. I'm just using that as an example. Do you know how much you can unlock that? So real assets that we have are key, whether it's plant, property, and equipment. Why should I have 2 generators in my house? Because power is not consistent, so I have one and put the other. How did I acquire them? Is it direct? Should I have done something else, even though there's leases? But what are the other? Should I have gotten one that me and my neighbor, because mine can supply to the houses? Should we have co-owned it? So unlocking that real assets into productive way in a transparent method is the way forward. We have to find a way to do it. Do I have an answer right now? I think it's a thesis you and I have to go and discuss. It's certainly the way forward, if you ask me.
Absolutely. Okay. Thank you so much, sir. Any final words for us, just as you?
I've gotten to like what you guys are doing, not just you, but the groups of people who are beginning to take the initiatives on their hands. And you asked something about all of us started from public sector. Back in the day, that was the only thing you start with, because it was well run. You learn a lot. But the public sector is a small part of our economy. What's our GDP?
350 billion.
Okay, so debatable. But what's government spending? What's the total budget for Nigeria? 49 trillion?
Yeah. So roughly
50 billion, right? That's it, the whole economy. Okay. If you take a look at NLNG, right? What is NLNG turning over? What is Dangote Cement turning over? What is Airtel turning over? What is MTN turning over? It's more than the whole money that the federal government is spending in 1 year. So if you combine those, so the opportunities are not in government, they're outside government. And the day we all realize that, let's go and build it for ourselves, which is what you guys are doing, is where we're going to see
thank you so much, sir.
Thank you.
Thank you. Thank you. Thank you, sir.
Thank you, guys.